Welcome to this Prosperity Market Roundup. Now, many of you know that property markets are shaped by fundamentals, the interaction of supply and demand that sets prices. But if we go one step further, we can see that demand itself is made up of a number of variables, including sentiment. And given the extraordinary year we've all experienced, it's understandable that sentiment has proven volatile. In the past month alone, we've seen Lockdown 2 announced and triggered by the UK government. There's been a tumultuous US presidential election, and finally, the news we've all been waiting for, a COVID vaccine with 95% effectiveness has been announced, hopefully offering a return to normality by spring of next year. Now, making investment decisions in a time of uncertainty has understandably proven challenging, though it's important to note that the UK property market has once again proven itself as a safe haven asset. So let's take a look at the key events of the past year and assess how the market has performed. So despite everything, property ends the year on a high, a record high in fact. The average UK house price now stands at an all-time high of just over £250,000. Prices have risen 7.5% year on year. That's the highest rate of increase since 2016, pre-Brexit levels of price growth. With headline figures like that, it's almost hard to remember that Lockdown 1 saw the UK property market come to a complete halt. Estate agent offices were closed, buyers were unable to complete their purchases. Those that did were unable to move home. And in that sort of climate, it was easy to be fearful. And indeed, many at the time forecasted that COVID would result in a widespread fall in house prices. But the government made it clear very early on that it would do whatever was necessary to prop up the country and the economy as it battled COVID. The mortgage holiday and the furlough scheme meant that thankfully the number of forced sellers was limited. And whilst transaction numbers fell, there was no general price dip. Then, when lockdown ended, the release of that pent-up demand, combined with the stamp duty holiday, triggered the mini-boom that has resulted in the record house prices we are now experiencing. So it was a very strong summer for property, and that has continued into autumn. The typical seasonal flow of the market is essentially out of the window, especially so now that we've finally had the good news that we've all been waiting for. There are 3 potential vaccines with effectiveness of over 90%, with my hometown of Oxford flying the flag for Britain. Then, news this week that the second national lockdown will end on December 2nd, the Prime Minister asking us for one last big push to get us through to the spring when vaccinations will have been widely rolled out. So now we have a roadmap to normality. How has the property market reacted? Well, there are 3 key points to consider. Firstly, the boost to investor confidence. The demand elasticity of investors is higher than residential buyers, and some buyers had viewed the uncertainty as a potential buying opportunity. However, it's now clear that prices are going to remain stable. Between general consumer confidence and the government measures, it's clear there isn't going to be a general price dip. So those that had been postponing investment decisions are now back in the market and activity has really picked up. Secondly, an increase in rental demand. For better or worse, economic uncertainty increases rental demand. Home buyers postpone their purchases, and people often need the increased flexibility that the rental tenure offers. This all places upward pressure on the rental markets in city centre locations where demand is already high. And finally, ultra-low interest rates are here to stay. It's clear that as governments try to stimulate their economies, they are going to keep interest rates low for the foreseeable future. For savers and investors, this is going to continue pushing them towards the relatively high and stable yields that property investment offers. I think the key takeaway is that we can all start to think long-term again. The reality is that property, especially off-plan investing, is about fundamentals over short-term sentiment. The next edition in this market update series is going to consider the potential factors that could impact the market for the year ahead, and then we're going to take a closer look at some of the opportunities and discuss how best to capitalise on them. If you have any questions about how Prosperity work with their clients to build and maintain wealth, please get in touch. What are your thoughts, Casper? How's it going to play out?